Welcome to PlotLines, where we'll use our over 30 years of experience in real estate communications to uncover the real stories behind real estate. I'm Heather Crowell.
And I'm Britni Acriveau. Dive in with us as we invite guests to break down the ever-changing landscapes of real estate together.
Welcome back to PlotLines, everyone. Today we have Dave Seymour, CEO of Freedom Venture Investments with us. Dave, thank you so much for joining us.
No, thank you. We got there in the end. We had a couple of technical challenges, overcome challenges, and then we can make the magic happen, right? So thanks for having me.
Yep. Looking forward to it. To kick it off, why don't you tell us a little bit about yourself, your background, your journey into commercial real estate or real estate in general, and just give our viewers a little overview of yourself and Freedom Venture Investments.
Yeah, for sure. Try and make this short rather than long, but I don't know. Where did it all begin? Once upon a time, a long, long time ago. I grew up in a working class environment in the south of England. I was born in London, and my family moved me to the south of England with my sister. Moving families out of the city, it was like a mass exodus from the smoke and the grime of London to the smell of cow manure and trees in the south of England. That's kind of what I grew up in. But to be frank with you, it was, I didn't know I was broke as a kid. You know, you give me a football or a soccer ball, as we say here in the States, and a bit of grass and a couple of mates to kick a ball around with in the projects, we were happy. And that's what it was. It was the housing estates. But growing up in that environment, there's no exposure to any financial literacy. There's no exposure to any business creation, right?
Yeah, right.
It's not uncommon either. I mean, it's a philosophy of working for somebody else and trading your time so that they can give you some money and eventually create your value. It goes all the way back as far as we can think, right?
Right.
So being in that environment, it wasn't conducive to anything other than working for somebody else. Anyway, long story short, I immigrated to the States and I landed in Wheeling by God, West Virginia. So you want to talk about
all right.
You want to talk about an alien?
From London.
Quite the jump.
An alien in an alien nation, from London, England to Wheeling by God, West Virginia.
Wow.
Yeah, that was it. That was an interesting period of time. And then from there moved up to New England, where I am now. Friend of mine said to me, Dave, get a good government job. You know, you don't have to worry about a pension. You'll be squared away, my friend. Go for that. And I did. Landed a job I was sharing with you folks prior to us recording. I was a firefighter and a paramedic in the city of Lynn, Mass, leading into the financial crisis. And again, bringing financial illiteracy with me. I was trading probably about 120 hours a week for other people's money at that period of my life. I was in my late 20s, early 30s, mid 30s. Working 3 full-time jobs and still financially just stupid, dumb. I'm not going to call it anything other than what it was. It was costing me my house. It was costing me my peace of mind. Look, I share this freely. I'm sober. I'm a sober guy. I got sober at 23 years old. Grace of God entered my life. I stopped drinking. I stopped drugging. I stopped, relying on crutches that were destined to knock me down rather than pick me up and help me. And, during that period of time of working that much, it's the closest I came to picking up a drink. I was losing my house. I had small children at home.
It's a lot.
But not uncommon, right? I mean, at the end of the day, so what is what some person could say. But what happens in those seasons, right? Those darker times, how somebody acts and reacts in those periods of time is really a philosophy for business. I think you would both agree, right?
Yep, absolutely.
When your back is against the proverbial wood wall or brick wall, whatever you have behind you, right? When your back is up against it, what do you do? Do you crumble? Do you fold? Do you put your hand out and ask for more assistance? Or do you stand up and say, okay, how much of this am I going to own? And if I own it, what can I do about it next? And again, long story short, I was sitting at Lynn Beach. If you know Massachusetts, we have a little strip of beach area there. I'm in my F-250 pickup truck because I work construction. I'm a firefighter. I turned the ignition in my truck, and there was a radio station that I listened to. It was a news radio station, BZ, here in Boston. And straight, it's going to give me God bumps. Straight up, as I turn the ignition on, I hear a commercial. Teach Me Foreclosure, a free 1.5 hour seminar coming to your neck of the woods. Learn how to do real estate transactions with no money down. And I'm like, I got no money. I can do this.
I can participate.
Right? I can participate in that. And, I look back on it today. For me, it was divine intervention. If I had prayed for something and that was the answer I got, I had a choice. Wow. It was either going to be a coincidence or it was going to be God. And I took the leap of faith and I went after it hard. And that's it. We started that journey and it took me into single family investing. I went at it with a vengeance. I went at it with systems that worked. I followed my mentors. If you showed me that it worked and you had results that it worked, I deployed those tactics. I didn't second guess them. I didn't let my own brilliance and my own ego get in the way of my success.
Right. Mm-hmm.
And, from there, it led into a TV show. We did Flip in Boston. I was recognized as one of the number one distressed single family asset investors in my market in Massachusetts. And then you get national TV stuff and you're on a TV show and everybody thinks you're smart, whether you are or not. They think you're smart. And then we rolled into the investment world we're in today. So I know that's kind of long-winded, but that's the story.
No,
that's the story.
It's quite the journey.
Yeah.
And I think if it ain't broke, don't fix it was one of the lessons in there too. So
yeah, a little bit. Yeah, for sure.
Great. Thanks for sharing all that.
Yeah, we appreciate that, Dave. Very interesting. All right. Well, as you know, our show PlotLines is all about discussing headlines in the real estate space, breaking them down. Multifamily really kind of continues to be sort of the darling in the real estate space. I don't think that has changed too much. Recent headlines, suggesting multifamily is still an anchor despite turbulent times and things like that. But we know that you're often called upon by national reporters and, an expert here in your own right. But tell us what you're seeing. Is that accurate? Are there challenges that, are existing in the multifamily space that aren't being covered? Or is it really all still that great and stable? And, break it down for us.
Yeah, great questions. Look, we can find a headline to match our philosophy no matter what it is, right?
Yeah.
Who's actually on the street? Who's in the trenches? Who's dealing with tenants, right? Those are the places that I like to go. So the national headlines, they give us some indication, but they don't give us any definition. What I don't see too much noise about, which is something that we're absolutely preparing for, is the distressed note market that's going to come down in multifamily. I think the last number, and maybe you guys can correct me, the last number was like $1.7 trillion in multifamily commercial real estate notes that have some element of distress on them. Either they're straight up upside down and they got to let them go and sell them for pennies on the dollar, or they need a workout. So, what are you going to do with that? Well, it's capital. Yeah. We're going into that cash is king scenario that every cycle goes through to be able to maximize on these notes. So, these notes are born out of COVID. They're born out of the amount of ridiculous amount of money that came into the marketplace to subsidize and hold up the economy. Yeah. Right or wrong, doesn't matter. I'm not Joe Biden. I'm not Donald Trump, right? I'm just a dude out in the trenches trying to make a buck and take care of my investors. So when we see that much distressed asset coming down the pike, preparation is key right now. Yeah. That plus maintaining your occupancies and now getting ready for a reset in what those rental incomes are going to look like. Because all of that crappy projection that we saw out there, a lot of bad actors came into the market, guys. A lot of bad actors came into the market, overstressing their pro formas.
They're going to get rich quick,
right? You've seen them. You're in the game. You've seen them. Don't show me. If you show me, I'm going to get on a soapbox. If you show me a 10% or a 7% increase year over year in rental numbers, because you can show it for 1 year in the past, but you still only show me a 1.5% to 2% increase in your expense ratios,
Yeah.
You're a scumbag.
Yeah.
I'm sorry.
Yeah.
That's what you are. You're not dealing with any authority or authenticity. So, those things aggravate me. And that then gives, an element of distrust to the industry in and of itself when you're raising private equity for these deals. I don't know. Would you agree with that? I mean, that's what I see.
Yeah. No, I think that's what we've all seen. I think that the notion that the endless rent bumps can last forever is, probably still to be told, the full story there. But there's definitely a lot going on there.
Yeah.
Taking care of the tenants.
Yeah.
Maximizing the ROI. Creative ways to give that tenant a great experience. Amazon drop boxes, community-oriented structure and involvement and interaction, great property management. If you're deploying those things in this market and the next phase that we go into, we believe at Freedom Venture, you're going to come out of there as a really strong company, a strong GP, strong owner-operator. But you got to hold people accountable. There's a lot of moving parts in this business. So
that's right.
Definitely.
Saying no is just as good as saying yes sometimes. And most people aren't really good at saying no when it comes to that stuff.
Right. Yeah. Sometimes if it looks too good to be true, it is.
Yeah.
Well, you touched a little bit on sort of the perception of private equity investors. Sometimes they get a bad rap. Talk to us a little bit about that and what what the reality is there.
Yeah, look, if you're a 506c Reg D capital raising component, right? SEC compliant, working only with accredited investors, it's good. But it also allows for a lot of ambiguity in the communication between the owner-operator and you, the accredited investor. So what do I mean by ambiguity? Go read an OM, go read a PPM, go read the operating agreement, go read that legal document, which is volumes of legal terminology that the average investor doesn't really comprehend and understand.
Right.
And what I've seen in this industry is there was a slew of syndicators that came into the market when the money was in the market, who were basically just getting themselves in the middle of a transaction with no skin in the game, for want of a better term, right? They didn't have any real accountability. I can market to money. You got a great deal, or so I think you have a great deal. How can I put myself in the middle of that transaction, and make, I don't know, 200 bips on the deal, whatever the numbers are. So that attracts a lot of bad actors when there's no accountability, no skin in the game.
Sure.
So look, it is what it is. The system is the way the system is. So how do you really and truly eliminate, or at least bring down, the amount of bad operators in the marketplace, is through educating the investors. Because you could be the best salesman under the sun, but it doesn't mean that the deal is as good as you can make it sound and still stay SEC compliant, not using guaranteed, et cetera, et cetera. So what we've done is, and we're doing it right now, is we're building up a massive education platform at a very low price point to come in. Because if I can take 1,000 people, business operators, professionals, bring them through the fundamentals of multifamily investing, make them pay a couple of bucks to learn it, so I know that they're interested in it. They can then do two things. They can go out themselves and do their own deals, 50 to 500, whatever number it is that they're comfortable with. Or what you tend to find is they say, hey, that's a lot of work. I don't want to do all that work. I'm still running my own business.
You do it for me.
Can you do it for us?
Yeah, exactly.
But here's the magic. Here's the difference in that. The difference is that they now ask the right questions.
Right.
They hold us accountable as the owner operator. Yeah. And that two-way accountability seems to be remiss in a lot of these transactions in the market, because they're not overly governed. Because they are private equity rather than transacted on the stock market through a REIT or something like that. Yeah, for sure.
Yeah, fair enough.
Yeah.
Okay. Shifting gears a little bit, we know that you do work with investors internationally. So did want to ask if, what are you hearing domestically versus overseas? Are there any major differences there?
Yeah, they've been operating. So if you look at some of the you look at some of the European companies,
Mhm.
some of the European investment groups, the family offices, they have been living in almost a negative yield environment for a very long time.
Wow.
Yes, there's
Okay.
always an exception to the rule, right? There's
Mhm.
always an exception. But what I tend to find is that because what we do here in the States is so good, right? We pro forma out deals ourselves at a 2.5 to 3 equity multiple, and
Okay.
we pro forma those out over 5 to 7 years. If you put
Okay.
that kind of deal in front of an international investor who's never experienced the US market before,
Right.
they immediately think it's a scam. It's too good to be true. And
Yeah.
and
How could
and
this
I
be?
sw I th this is the to his
Mhm.
hand, right? We will actually wind down our return profiles so that we can attract international
Okay.
capital because they're used to a negative yield or an on-par yield.
Interesting. Okay.
They're not
Wow.
used to the
Yeah.
deal flow and the opportunities that are here in the States. Now,
Okay.
That's fascinating.
cross-border, being able to move capital, is a challenge. There are quite a
Okay.
few
Yeah.
countries, obviously, that are still on the list of you can't play with these guys.
Yep.
Yeah.
Yep.
But you really only need 3 to 5 good contacts or good brokers, capital brokers
Okay.
in those markets to be able to have enough good conversations, because once you break through that barrier, same
Yeah.
story as always, right? Good news travels fast and you
Yeah.
Mhm.
find opportunities. So to surmise that, they're hungry. They're hungry for US
Okay.
investments. They're
Okay.
hungry for our opportunities.
Okay.
They like the solidity and the backbone of multifamily in this country.
Okay.
So, yeah,
Just a little
that's a
skeptical,
great
maybe.
opportunity. Yeah.
Yeah.
Yeah,
Okay.
you gotta know how to communicate with them, you know?
Yeah.
Sure.
Yeah. No, that makes sense.
Yeah.
Um. Okay. No, thanks for that. The talk to us about the capital markets and the current environment and how that's shaping deals right now and your deal flow and the opportunities that you're seeing. I think you talked a little bit about it at the beginning,
Yeah.
but
Yeah.
um
Look, we've stayed as a middle market investor.
Mhm. Okay.
And the middle market investor attracts middle market capital.
Yeah. Okay.
When we first started at Freedom Venture, we're gung ho. Let's go. We're going to do so much work. It's going to be awesome. And we ran into a very similar barrier to entry that a lot of operators run into. Is you start talking to some of the capital market providers and they're like, yeah, I love you guys. Love the energy, love your market, love your underwriting, love your analysis. Strong. We write minimum checks of 50 to 100 million.
Yeah. Yeah.
And that's when the jaw drops. That's when the jaw drops. Well, that 50 to 100 million in capital market deployment is coming through a set of channels that we haven't met. We haven't been able to attract that capital. So
Yeah.
I can't really talk to that. I'm not BlackRock. Don't ever want to be BlackRock.
Right.
But what I
Right.
can tell you about the capital market in which we work, the accredited investors, the smaller family offices,
Yeah.
some SPV groups, some different groups like that. Those guys are still skittish. It's always interesting.
Hmm.
It
Okay.
sounds kind of cheesy, but it's the old Warren Buffett philosophy: when everybody's greedy, be fearful, and when everybody is fearful, be greedy.
Yeah. Yeah.
And when that money is sitting in a fearful state, right, it's not moving. It's like manure. If you leave money still, it kind of gets stinky. But if you sprinkle it around, stuff grows. It's a beautiful
Yeah.
thing. But
Yeah.
we're
Yeah.
in that
Yeah.
manure. We're in that manure phase of money. And when the
Okay.
first one goes and lets loose, then the rest will tend to follow. It's always the
Okay.
first one to invest is always the most skittish. But it goes
Okay.
again, guys. It goes right back to what I just said. Educate. I
Yeah.
have to
Yeah.
educate them. I have to show them the vulnerability of the deal. Is it stress tested? And when you
Yeah.
start to show the stress test on an acquisition, then the
Mhm.
money will tend to follow, because they're like,
Okay.
okay, these guys aren't just telling me the sun's always shining in Philadelphia,
Right.
right?
Right.
They're really showing me the downside of a project as well as the upside.
That's
So
right.
Yeah.
if that's the case, then the money follows.
Okay.
Okay.
That makes
fair
sense.
enough.
Yeah.
Well, I guess looking ahead to the next, year, 2 years, what should investors be paying close attention to, particularly in the multifamily space?
Yeah, but buckle up, Buttercup. Here we go. That's what they're going to be looking forward to. You cannot, no matter how the current administration, pay attention to digital currencies and what the current administration has been doing around that. Not my wheelhouse, not smart enough to understand it fully, but smart enough to smart enough to
it's going to have an impact, right?
Yeah, I'm smart enough to know that money is going to move internationally a lot faster than it has prior to, the full deployment of a digital currency. What that means to us at the multifamily level means that international capital can come in a lot quicker. And it will take up a lot of the inventory if we're not prepared stateside to execute on it.
Okay.
So, what do I see in the next 18, 24 months? The distressed assets will come into the market. They're already trickling in now. And those that are prepared, right? You got lucky. No, when luck meets opportunity, right? When opportunity meets opportunity right there, that's the luck. Are you prepared for it? So we're looking, like I said, extensively to educate investors, get ready for the asset classes and the distress component of it to come down the pike, and then be in a strong cash position and take down these things that, probably the banks are going to be around 45 to 50% loan to value. Like, we want to go heavy on the cash and low on the loan, because I can't predict what those donkeys are going to do with the Federal Reserve. I got no idea. Right? We know what we hope they're going to do, but whether they actually do it or not is always interesting. So, removing. Look, if there's any investors listening to us having a chat today, remove the folks who have control over the deal, the banks. The huge capital providers. See if you can find ways that isn't the case. Can you come together as a group through a syndicated deal, whatever the case may be, get to know the operator and then execute and take steps, but don't take huge leaps in this stuff right now. Just incremental, slow and steady. I always say it's like the Clydesdale of real estate investing. You know what I mean? Just big and steady. Great tax advantages. All right, I'll put another $100,000 over there. Slow your roll, baby. Just let it go. It's going to be okay. And if you can stick with that philosophy, I think we're all going to do very, very well, including the tenants. Including the tenants. Yeah.
No, that's good. Yeah, we hear a lot about patience on our show.
Yes.
So, okay, well, this brings us to our favorite part of our show, which is where you get to rewrite the headline or write your ideal headline. So if you could write the ideal headline for multifamily investing or private equity investing or private equity multifamily investing, what would it be?
Yeah, it's a great question. I didn't read that one on the list.
That's all right. You actually gave us a couple here just a moment ago that you could play off of.
Yeah, look.
You're quick on your feet. You'll come up with something.
No, I'll be fine. Trust me, I'm good. I got this one covered. Something along the lines of, if he said he was going to do a thing, he did the thing. You know what I'm saying?
Okay.
Like, for real, it doesn't matter whether I'm talking to my kids, my beautiful wife, a business partner, a tenant, a trash man, a contractor, or you guys on this podcast. It doesn't matter who I'm talking to. If I said I was going to do a thing, do the thing. And if that can be a reputation on a headstone, a reputation on a business card, a reputation on a portfolio, then I'm going to be good. And the last thing is when I get upstairs to the big guy, I just want to ask him, how did I do? How did I do? And he says, good and faithful servant. You did all right,
Excellent.
kid. Well played. You can come on in. So if I can achieve those two things, I'm happy.
All right.
Awesome.
I love it. Well, Dave, thank you so much for doing this with us today. We really appreciate your time.
Thank you both.
This podcast is a production of Gregory. If you enjoyed our discussion, please subscribe wherever you get your podcasts